Tesla's Q1 earnings beat expectations, but I do not think the biggest story was the beat itself. The real story is that Tesla's next growth engines, FSD, Robotaxi, Cybercab, and Optimus, are starting to move from vision to execution. And for long-term investors, that matters much more. Hey everyone, this is Ken. In this video, I want to break down what really mattered in Tesla's Q1 earnings and conference call. Yes, the numbers were solid, but more importantly, Tesla showed that some of its biggest future businesses are starting to look more real, more concrete, and more investable. So the key question is not just whether Tesla beat estimates. The real question is whether Tesla is actually making progress on the businesses that could define the next phase of the company. Let's start with the numbers. Tesla reported about $22.39 billion in revenue and non-GAAP EPS of $0.41, both above expectations. Gross margin improved to 21.1%. Free cash flow came in positive at $1.44 billion, and cash rose above $44.7 billion. So this was not some massive breakout quarter in terms of growth, but it was a solid quarter that showed improving profitability, healthy cash generation, and financial stability. That matters because investors needed reassurance that Tesla could still protect margins while continuing to invest aggressively in the future. At the same time, I would not call this a perfect quarter. GAAP earnings were not especially strong, and there are still real execution risks ahead. But overall, the numbers were good enough to support confidence. Now, here is where things get more interesting. Tesla is no longer being judged only as a car company. The market is increasingly focused on whether the company can turn autonomy, robotics, and AI infrastructure into real businesses. That means FSD, Robotaxi, and Optimus are now central to the investment story. And this quarter, Tesla gave the market more substance on all three. Let's start with Robotaxi. Tesla said paid Robotaxi miles nearly doubled quarter over quarter. And I think the key word is paid. This was not just testing. This suggests Tesla is starting to operate Robotaxi as an actual revenue generating service, even if it is still early and small in scale. Tesla also said unsupervised rides expanded beyond Austin into Dallas and Houston, with more cities being prepared through testing and regulatory work. Of course, there are still major hurdles. Regulation and safety are not small issues, but the direction is becoming clearer. Robotaxi is slowly moving from concept to commercial rollout. That connects directly to Cybercab. Elon Musk said Tesla has started Cybercab production. That is important because it means Cybercab is no longer just a concept vehicle or event stage idea. It is now a manufacturing project. Now, we should stay realistic. Elon also made it clear that early production will be slow, which is normal for a completely new product. The real ramp is expected later this year, so Cybercab is not fully here yet, but Tesla has crossed an important line. It has moved from unveiling the idea to actually building it, and strategically that matters because Cybercab looks like Tesla's long-term dedicated Robotaxi platform. Now let's talk about FSD because this may have been the biggest strategic point in the whole call. Tesla confirmed that FSD V15 will run on AI4, and management described it as a major architectural overhaul, not just a small software update. That is important because it suggests Tesla sees V15 as a real turning point. Tesla also repeated its long-term goal of global unsupervised FSD where legally possible, and even mentioned the possibility of customer-owned unsupervised FSD around Q4. Now, I would be careful with the timing. Tesla has always been aggressive with targets, but the direction is clear. Tesla is still pushing hard toward true driverless capability as a core growth engine. And there was another important point. Tesla said much of Q1 FSD growth came from subscriptions. That means FSD is not only improving as a technology story, but also becoming more relevant as a recurring revenue business. Of course, the FSD discussion also came with a difficult reality, and that is HW3. Tesla admitted that HW3 will not be capable of unsupervised FSD. That is a major shift in clarity. For HW3 owners, that is disappointing. Tesla said it plans to offer discounted trade-ins into AI4 vehicles, some computer and camera upgrades, and FSD V14 Lite for HW3 by the end of June. But from an investor perspective, this also removes ambiguity. Tesla is clearly signaling that AI4 is where its real autonomy future sits. That may be painful for some customers, but it gives the market a much clearer picture of where Tesla is actually headed. Then we have Optimus. Tesla said it will begin large-scale factory preparation for Optimus in Q2. In Fremont, it is replacing space previously used for Model S and X lines. In Texas, it is preparing a second line as well. That changes the conversation, because now Optimus is not just about demo videos, it is about real factory lines, production planning, and timeline execution. Elon said Fremont production could begin later this year, with Texas following next summer. That does not mean massive scale is right around the corner, but it does mean Tesla is starting to treat Optimus as a real manufacturing product, and that is a major step. There was also a quieter but important part of the story, and that is AI infrastructure. Tesla said Cortex-2 is already running workloads, Dojo 3 is still in development, and the company plans to build a research chip factory at Giga Texas. On top of that, it is still strengthening battery supply, including LFP efforts in Nevada. This matters because Tesla is not just building AI products. It is trying to build more of the infrastructure underneath them. That is how companies create long-term advantage, not just by launching exciting products, but by owning more of the stack that supports those products. So when I step back, my takeaway is this. Financially, Tesla delivered a quarter that was solid enough to restore confidence, but strategically, this quarter mattered because it made the future story more concrete. Robotaxi is showing early monetization. Cybercab has entered production. FSD V15 looks like a major platform shift. HW3 limitations are now clearer. Optimus is moving into factory preparation, and Tesla continues building the AI and supply chain foundation underneath all of it. That does not remove risk. Unsupervised FSD could take longer. Cybercab could ramp slowly. Optimus could take years to scale. But for long-term investors, the key point is this. Tesla is no longer just talking about the future. It is starting to build it. And to me, that is the most important takeaway from this quarter. What stood out most to you in Tesla's Q1 earnings? Was it the financial beat, the Robotaxi expansion, the FSD shift to AI4, or the Optimus production plans? Let me know in the comments. And if you enjoy Tesla analysis focused on long-term strategy and what it means for investors, make sure to subscribe. Thanks for watching, and I will see you in the next one. Before we wrap up, let me take a moment to introduce myself. I drive a Tesla Model Y, and at home I've installed a Tesla Powerwall, so I actually charge my car with solar energy. I truly believe Tesla is shaping the future, and that's why I share the latest news and insights here on this channel. I'm from Japan, but I want to connect with Tesla fans all around the world. That's why I also create an English version of my videos. YouTube now lets you switch the audio into your own language, so you can enjoy it in whatever language you prefer. Most of all, I'd love to connect with Tesla fans everywhere so we can support Tesla together. I also share updates on X, so feel free to follow me there and let's connect. And if you haven't already, please subscribe to this channel. I'd really appreciate it. Thanks for watching, and I'll see you in the next video.